Hi students, welcome to the video on financial statements at your fingertips. So all of you know financial statement is very important in all the field of commerce, business. It is very vital for commerce stream students, BBA, MBA, chartered accountants, then for bankers, for their CIV and their promotional aspects, and also while processing loan proposal, that is appraisal of loan proposals. So in this video, this is the sixth video, we will discuss cash flow statement covering all the three activities. And three activities are cash flow from operating activity, either it is net cash flow or net cash used from operating activity, then net cash flow or uses from investing activities, or net cash flow or uses from financing activity. Then we total all the activity, finally we will get the net cash flow from all the three activity. Then we will add the cash and cash equivalent at the beginning of the year. Then result is the cash and cash equivalent at the end of the year. This is nothing but reconciliation of cash and cash equivalent at the beginning with the end. So in this video we will solve one problem. So before that, you should know ascertaining cash flow from operating activity. Operating activities are the main source of revenue and expenditure in any enterprise. Therefore, the ascertainment of cash flows from operating activities need special attention. As per Accounting Standard 3, an enterprise should report cash flow from operating activity by using either direct method or indirect method. Under direct method, which is a major classes of gross receipt and gross cash payments are disclosed. That means under direct method, we will first take the cash sales, that is proceeds out of cash, that is inflow of cash. Then cash received from our sundry debtors or from receivables. Then any other income, that is operating expense, operating income, that is inflow of cash, that is interest, dividend, suppose it is finance, whatever that may, all income will be added, that is inflow of cash. Then outflow of cash includes the cash payment to supplier for purchase of material. Total cash payment, if it is cash purchase, will pay immediately, or business will pay immediately. If it is credit purchase, then according to the agreements, the business will pay or company will pay. That is outflow of cash. Then provision for employees, payment to all expenses related to employees. So under indirect method, net profit or loss is duly adjusted for the effect of first, transactions of non-cash nature. In business, we debit all some transactions of non-cash nature to the profit loss account. That should not be, because it is not an expenses due to operating activity. So we will add it. So what we will do? We will add all non-cash and non-operating expenses to the net profits of the business before charging income tax or before paying income tax. Second, any deferrals or accruals of past or future operating cash receipt, that is also to be added. Then item of income expenses associated with investing or financial activity, it will be added in calculating the cash flow from net cash flow or net cash used from operating activity, and it will be taken into account either in investing activity or financing activity. So our starting point here is net profit or net loss before taxation as per statement of profit loss. Here statement of profit loss is not given, so we can ascertain how much is the net profit from liability side, that is surplus. Opening, closing minus opening, that will give you either net profit or net loss. Then regarding proposed dividend, in the previous video we have already elaborated discussion. That means in case of proposed dividend, dividend will be declared in the board of director meeting before the end of the year. Then they in the next year, succeeding year, the company will call the annual general meeting. On annual general meeting, it will be, suppose it will be accepted or passed by the voters or the shareholder, then it will be treated as payment of dividend. So what we will do, if proper dividend opening closing balance is given, so previous year, that is opening balance, proper dividend of previous year opening balance after declaration or approved by the shareholder will be debited to surplus. We will add to the surplus, that is balance sheet statement profit loss, will add to the net profit, and that dividend provision or paid will be shown as outflow of cash under financing activity. So here we will solve one problem related to cash flow statement, taking into consideration all the three activities. So it is given shareholders capital, it was 10 lakh, at the end it is 13 lakh. So there is increase of shareholders capital to the extent of 3 lakhs. Then reserve surplus, general reserve was 2,50,000, then at the end it is 3 lakh. That is enhancement of general reserve to the extent of 50,000. Surplus opening is given 1,52,000, closing 1,54,000. So net profit, we will start adjusted profit loss. So base is net profit for operating net flow from operating activity, that is 1,54,000 minus 1,52,000, that is 2,000. Then non-current liability. Here balance sheet we are showing in vertical form according to Companies Act 2013. So bank loan was originally it was opening 3,50,000, closing means repayment of bank loan, that is outflow of loan, outflow of cash to the extent of 3,50,000. Trade payable opening was 7,50,000, then closing is 6,75,000. So that is payment of trade payable to the extent of 75,000 during that year. Then provision for tax, opening 1,50,000, closing 1,75,000. Then we have to, whether in the adjustment anything given, accordingly we have to adjust. Then tangible fixed asset, tangible fixed asset include land and building machinery. Land and building opening was 10 lakh, closing 9,50,000. In the adjustment, suppose nothing is given, that 50,000 reduction is due to depreciation on land and building. So machinery 7,50,000, closing 8,45,000. So that is increase to the extent of 95,000. We have to consider after seeing the adjustments. Goodwill opening was 0 and closing 78,000. That means it is raising of goodwill to the extent of 75,000. If we purchase it, then there will be outflow of cash. Otherwise, here we have to see what is adjustment given. Inventory was 5 lakh stock, closing 3,70,000. So 1,30,000 reduction of inventory. When there is a reduction in inventory, then definitely there will be inflow of cash from working capital assessment or from current asset, current liability side. Then trade receivable 4 lakh, it is 3,20,000. There is a reduction of 79,000. Trade receivable, it includes sundry debtor bills receivable, but here only sundry debtor given. Cash in the beginning is given 2,000. So cash and cash equivalent, the beginning is 2000, cash at the end 3000, back beginning nil and 40,000. So cash and cash equivalent at the beginning only 2000, at the end it is 43,000. So we have to reconcile the cash flow from all the three activities plus the opening cash and cash equivalent. It should tally with the closing cash and cash equivalent. So first we will see what are the adjustment given. Dividend of 1,15,000 was paid. That means dividend 1,50,000 already we discussed. The previous year proposed dividend by the board of directors in their meeting. In the next year it is supposed passed in the annual general meeting, then it is treated as payment of dividend. Here this dividend is non-operational, it is not coming under operating activity, so it will be added. Net profit will add provision for dividend 1,15,000. This dividend we will show under, we have paid the dividend means this is we paid to the shareholders dividend. So this is from financing activity. Then assets of another company purchased for a consideration 3 lakh, but 3 lakh in the form of share. The company has issued 3 lakh share to another company for purchasing its assets. Assets worth, asset purchaser, stock 1 lakh, machinery 1,25,000, total 2,28,000. So you should know how much he has paid for goodwill, because he by purchasing only stock worth 1 lakh, machinery worth 1,25,000, the company is issuing the equity shares to the second company or another company. It means the company is paying goodwill 75,000, which is the balancing figure. Machinery was purchased for 40,000, depreciation on machinery written off 60,000, income tax provided during the year 1,65,000, loss on sale of machinery was written off to general ledger, that is loss on sale of machinery of rupees 1,000, this is 1,000. So there is 1,000 loss in sale of machinery, it has been debited to general ledger. So first we will adjust the machinery account. We will open one machinery account here. You know all assets shows debit balance. So on the opening day we will write to balance brought down. To balance brought down. The amount is machinery opening 7,50,000. Right, 7,50,000. Then closing machinery write by balance carried down. This is left side debit side, this is right side credit side. So by balance carried down. The amount given here 8,45,000. Then it is given machinery purchased by issuing share capital. So to share capital account, that is machinery worth is 1,25,000. Then machinery purchase was for 40,000 given to bank by paying bank, that is outflow of cash. 40,000 purchase of machinery, it will come under investing activity as outflow of cash, purchase of machinery. Then 1,000 loss on sale of machinery, 1,000 has been debited to reserve and surplus account. So by reserve and surplus 1,000. Then depreciation on machinery 60,000 by depreciation on machinery, that is 60,000. So we will total it. The debit side is 9,15,000. Here it is 9,06,000. So 9,000 is the balancing figure, that is by bank, sale of machinery. So sale of machinery is inflow of cash under investing activity will show 9,000. This is about machinery account. Then already share capital you can do like this. Share capital account. Share capital is liability, it is credit balance, so write by balance brought down. By balance brought down. It was 10 lakh, then to balance carried down. It is 13 lakhs. So credit side write by stock 1 lakh. By purchasing the asset, we issued 3 lakhs share. By machinery 1,25,000. By goodwill, that is balancing figure of 3 lakh, that is 75,000. So it is 13 lakh. So there is issue of share in lieu of assets. Then we will think about reserve and surplus. Reserve and surplus. The opening balance was liability, that is by balance brought down. It was 2,50,000. Then to balance carried down. Balance carried down. Amount comes to 3 lakh. Then reserve surplus debited to machinery account due to loss on machinery 1,000. So difference amount is by adjusted profit loss. By adjusted, it will be debited to profit loss account. That is 51,000. So adjusted profit loss is 50,000. We will consider. Then we use machinery. Then we will prepare cash flow statements. Cash flow statement of ABC Limited as on 31st March 2024. First is net profit, that is base, that I already told you 2,000. Net profit base is 2,000 here. That is 1,54,000 minus 1,50,000 surplus, balance in figure of surplus, that is closing minus opening. Add non-cash, non-operating expenses, non-cash and non-operating expenses, non-operating expenses. That we will do serially. One is our dividend, provision for dividend. That is here 1,15,000. Then here purchase of stock in lieu of share. Purchase of stock in lieu of share. In lieu of share. That is 1 lakh. This is 1 lakh. Then depreciation on machinery. Depreciation on machinery. It is depreciation on machinery is 60,000. Then depreciation on building, that we calculated here. Depreciation on building, because opening was in the building, opening was 10 lakh, closing 9,50,000, that is depreciation of building is 50,000. This is 50,000. Then transfer to general reserve. Transfer to general reserve. The amount is 51,000. That we already calculated here. Then provision for tax we have to calculate. So provision for tax we have to calculate. provision for tax. So provision for tax is a liability, that is current liability we will consider. Here adjustment will take by balance brought down 1,50,000, brought down 1,50,000, to balance closing balance, to balance carried down 1,75,000, to balance carried down 1,75,000. Then provision for tax during the year is given 1,65,000 by adjusted profit and loss account, that is 1,65,000. So total comes to 3,15,000. Then to bank tax paid, to bank tax paid deducted from operating activity. Tax paid is 1,40,000 or 3,50,000. Then add provision for tax, that is 1,65,000. So total it 1,65,000. So total comes to 000 5,41,000. It is 5,41,000. It is 2,000. Then here we will add, this is net cash flow. Net cash flow net cash flow from operating activity before working capital adjustment, before working capital adjustments. Then we will adjust working capital. Under working capital comes current assets. Current asset inventory was 5 lakh, then closing 3,70,000, say 1,30,000. Decrease in inventory. Decrease in inventory. First you should know what is working capital. Current asset minus current liability is working capital. When current asset increase means our cash, or we are paying the cash, that is there will be outflow of cash. When working capital, when current asset decrease means we are selling our current asset and we are getting cash, that is inflow of cash. Any decrease in asset is inflow of cash, increase in current asset is outflow of cash. Any increase in current liability, that is inflow of cash. Any decrease in current liability, that is outflow of cash. That you have to remember. So here decrease in inventory to the extent of 1,30,000, that we add it. That is inflow of cash. Then trade receivable was 4 lakh in the beginning and 3,21,000. There is reduction of 79,000. So decrease in trade receivable. Decrease in trade receivable. So amount is 79,000. 79,000. Then liability. Under liability side, there is trade payable was 7,50,000. So it is reduced to 6,75,000. That is outflow of cash. Decrease in trade payables. Decrease in trade payables. So outflow of cash means it is, that is minus. So we will write it in bracket. That will be 75,000. 75,000. So difference will be 1,34,000 less payment of tax. under operating activity, payment of tax. After adjusted net profit, we have to pay tax. Payment of tax is 1,40,000. 1 lakh tax account we have done, that is 1,40,000. So it belongs to operating activity. So this is 1,40,000. So here we will get 5,43,000 plus 1,34,000. 5,02,000 plus 5,41,000 plus 1,34,000. The total is 6,77,000. So 6,77,000 minus tax, income tax 1,40,000. So net cash flow from operating activity is 5,37,000. Net cash from operating activity, that is net cash flow from operating activity. So it comes to 5,37,000. Then we will calculate cash flow from investing activity. Cash flow from investing activity. Under investing activity, two things are given. One, sale of machinery. So that is inflow of cash. Sale of machinery. Amount is only 9,000. Then minus purchase of machinery. Purchase of machinery. That is 40,000. It is given 40,000. So 40,000 minus 9,000 plus means net effect is 31,000 we deduct. We will deduct 31,000 under net cash flow from investment activity. Then comes the financing activity. Bank loan was 3,50,000 that we paid. Bank loan. Then cash flow. This is net cash flow. Net cash flow from investing activity, that is 31,000. My net cash flow means net cash used. Net cash used. Then comes cash flow from financing activity. One is payment of dividend, 1,15,000. Payment of dividend 1,15,000. That is outflow of cash, so it will be under minus or bracket. Then another is repayment of loan, repayment of bank long-term loan, repayment of bank loan. It is also outflow of cash. This amount is, that is 3,50,000. It was there in the beginning, 3,50,000 and nothing. So it is 4,65,000 will be deducted here. 4,65,000. It is 3,50,000 plus 5,37,000 minus 31,000. That is 5,06,000. 5,06,000 minus 4,65,000. Okay. So this is payment of bank loan. So it is net cash used from financing activity. So it is within minus 4,65,000. So result is net cash flow from all the three activities, from that is net cash flow from operating activity, suppose it is A, net cash flow, that is net cash uses from investing activity, that is B, net cash used from financing activity C, that means A plus B plus C. So it is 5,37,000, 5,37,000 5,37,000. This is minus total 31,000 plus 4,65,000, 4,96,000, 4,96,000. So net cash flow from all the activities, that is from all the activities A plus B plus C, that is comes to 41,000. It is coming 41,000. Then add opening cash and cash equivalent. Opening cash and cash equivalent. Here only cash in hand is given, equivalent. Cash in hand is only 2,000 given, cash at bank not given. So it is 40,000. It should tally with the closing balance of closing cash and cash equivalent. Closing cash and cash equivalent. So here it is given in the closing balance, the cash. Closing cash is given, that is, so total closing cash was given 3,000, then bank was given 40,000. So it is also equal to this 43,000. So reconcile. So I already told you the main purpose of preparing this cash flow statement, we have to take into account the net cash flow or cash used from all the three activities. Then we will add it with the opening cash and cash equivalent. So it should reconcile with our closing cash and bank equivalent, cash and cash equivalent. Then only our solution is 100% perfect. Thank you for watching this video. Don't forget to like, share and subscribe the video. If you like, subscribe and share the video, it will create enthusiasm on my mind to prepare more and more video which will be very helpful for all of you.